Now we will come to qualitative tools. So first we will understand what these qualitative tools are. Okay. Now first of all we will see what is moral suasion. Now if I talk about moral suasion, so moral suasion is, you can say, if suppose any bank, as we talk about that, monetary quantitative tools will be successful when all the banks will implement the lending rate and deposit rate as per the change repo rate. But if suppose any bank is not implementing it, then in that case RBI used to conduct one informal meeting. So in that informal meeting, RBI used to request the bank to change the repo rate or to change the lending rate and deposit rate as per the changed repo rate. Okay. So ultimately that is called moral suasion. So ultimately इसमें हो क्या रहा है, RBI conduct one informal meeting. So when I am saying informal meeting, it does not conduct informal meeting with all the banks. It conduct informal meeting with only those banks which are not changing the, you can say, lending rate and deposit rate as per the change repo rate. Okay. Informal meeting with selected banks. So now you know what are those selected banks. Selected banks to change lending rate and deposit rate as per repo rate. So this is moral suasion. So this is moral suasion that you have to remember. Okay. Now I hope this is clear to you. Now direct action. Now in direct action you will see that what is the condition here is that if suppose first RBI will tell them or request them in moral suasion, if suppose still they are not ready to listen to RBI, then RBI will become Singham. Singham means they will take strict action, that is imposing fine. Okay, so they will take that action. Okay, so under direct action, okay, RBI take action against selected bank, for example in the form of fine. Okay, this is direct action. Okay, number 3 is margin requirement. Now what is margin requirement? Now whenever you go to the bank, okay, so whenever you ask for the loan from the banks, okay, so for example you need a loan of 10 lakh rupees, so bank will, it depends on the discretion of the bank that they can give you that loan without mortgage as well as they want mortgage also. Now it depends on them. So there may be possibility that they will give you loan without any mortgage. Okay, or they will ask you that you need 10 lakh rupees loan, so you have to give some property worth rupees 10 lakh. Okay, or you can say 50% of your loan amount. Okay, so margin requirement is basically the difference between the loan value and the collateral value. Okay, the margin requirement is basically the difference between loan value and collateral value. Okay, so this is margin requirement. Now fourth is credit rationing. Now best example of credit rationing is priority sector lending. Priority sector lending, although we'll talk about this thing in banking chapter. So best example is priority sector lending. Now in this credit rationing you will see that what has happened or what used to happen is, like for some sectors, for example the loan rate is 8%, but for some sectors the loan rate is or lending rate is less than 8%. Okay, so you can say bank rate is 6%, and for particular sector RBI used to give guidelines that if any person is coming from agriculture sector, you will give loan at less rate, okay, as compared to service sector. Okay, so this is called credit rationing. Okay, number 5, consumer credit regulation. Now basically consumer credit regulation deals with down payment down payment and time period.